welcome to this ET Now special. I'm Anisha Jain. Well, if you're any amount of travel buff, you would have guessed it by now where we are. We're right here in Goa at the new airport, that is MOPA, which was built, managed and operated by GMR Airports. But we are not here for travel or leisure. We are here to understand what the future is going to be like for GMR Airports. And to do just that, I have with me Mr. Saurabh Chawla. He's the ED Strategy and Finance at GMR Group joining us. Saurabh, hi, thanks so much for hosting us here.
Pleasure.
You know what, if I was Tom Hanks from the movie of Terminal, I would have loved to be in this terminal because it's very bright, very vibrant and not really a gloomy feeling as we saw in the Terminal movie.
Yes, so it truly reflects the Goan culture, Goan colors, both interiors and exteriors, color combinations. It's all about having fun. So you have fun at the airport, and we have all kinds of eateries and other areas of entertainment is actually coming up over here, which will truly reflect that your holiday starts at the airport, and when you come back from town, it'll end at the airport.
So that's a good feeling that you don't have to go to your resort and then the travel starts. It starts from the airport itself. Thanks so much for doing that. But you know, talking about the vibrancy and the positivity and the optimism we are talking about, it's been a lot better now for the GMR Group, especially the airports business, because the last 4 to 5 years were a bit of a turmoil, right? With the kind of debt-saddled balance sheet that you had earlier, COVID hit and the passengers kind of completely went off. Talk to me about how the last 5 to 6 years were. What did you do to turn it around? Because it's pretty much become a case study in turnarounds now.
It is a case study, and honestly speaking, we expanded substantially both in the airports and non-airports, especially energy, prior to 2020. But then we found that our debt levels had gone up substantially high. The risk parameters were going through the roof, and hence we decided that let's do a stress test. Let's reshape our balance sheet, and that's what we did. In 2019, we did enter into a JV agreement with the GIC Singapore and Tata's, but that transaction did not go through. We did not get the regulatory approvals. But in 2020, we were able to strike a relationship with Group ADP, which is the French government-owned airport operator out of Paris. And they bought into 49% of our airport platform. And that was a big sum of money that we received, through which the deleveraging exercise began. And I think it was a very timely investment of theirs, because just after that, in March of 2020, COVID happened.
Yeah.
So we were very lucky that we got that money, and we had a strong financial partner. 2 years just went through in COVID. We really could not do much, but just to keep ourselves afloat. But during that period of time, we kept our focus. We expanded the Delhi airport from about 50 odd million passengers to 100 million. Hyderabad from 12 million to about 34 million. And we built out a new greenfield airport here in Goa. So the focus remained, balance sheet improved. And then by that time, as COVID conditions abated, traffic started to come back. So we are at a very sweet spot now.
Talking about the sweet spot, it seems like that the future of the next 3-4 years are going to be a bit more sweeter. But to understand that, for the benefit of our viewer, let's break it down, right? Because if I have it right, and correct me if I'm wrong here, you have 3 large revenue streams: aero, non-aero, as well as the real estate. Aero is the user development fee and the cargo handling and the parking charges, etc., that you charge from the airlines. Non-aero is the F&B and the duty-free services that we pay for and we buy a lot from the airports, of course. And then, of course, the real estate monetization. So I wanted to break it down and start with the aero part of the business first. A large part of it comes from, of course, the expansion as well, right? So talk to me about, you talked about how the Delhi airport has scaled up, Hyderabad has scaled up. What about Goa? Is this also likely to ramp up as we head into the next year? And what more opportunities lined up for you?
Yeah, so beginning with Delhi, Delhi we have put in a capex of almost 12,500 crores, expanding the capacity from about 55 million passengers to 100 million. So basically it takes...
And that's done with, nothing else
That's all done,
planned.
all completed. So obviously, the revenue per passenger or yield per passenger will go up for us. We have already filed for the new tariff with the regulator, and hopefully I think we should have their notification coming in the fourth quarter of this fiscal year. Goa is a new airport. Goa is something where it will take some time. Interestingly, we are EBITDA positive in our first year of operations. So we've done about a little more than 4 million passengers in Goa in our first year of operations. And as we speak, and interestingly also, Goa is a two-airport
Right.
city. So we have not cannibalized any traffic from the old airport. This is all new demand that has come, working with the airlines, which the underlying message is that there is tremendous demand, underlying demand within the country for people to travel, whether for business or for pleasure. And Goa, of course, is a prime most holiday destination, not only for Indians but for foreigners too.
So 4.4 is what the capacity is right now. In the fourth phase of expansion, what will it go up to, and
It'll
when
go
will
up to
that happen?
it will go up to about 7.7. It's already underway. It will finish in this fiscal year itself.
And what's the amount that you're putting in?
It's a very small amount. It's about 250 odd crores is being
So just sweating out the efficiencies more from the kind of setup you already have.
Exactly. So basic work had already been done when we put in the 4.4. Actually, it was built for 7.7. Okay, but throughput was much lower. Yeah.
And what about the other one? I think the Andhra Pradesh one is also something which is in the works. When do you expect the completion of that? What kind of investments have you made into it?
So Andhra Pradesh, we are building in Vizag in Bhogapuram. It's a greenfield airport. The existing airport will shut down once this airport goes live. So we don't characterize that as a greenfield airport. We characterize that as a brownfield airport. So it will take about another 2.5 to 3 years for that airport to complete. Although the current progress is very good. We have done almost 30% of physical work in Bhogapuram in Vizag, and substantial amounts of investments are going there. We have a partner in Bhogapuram, like in Goa. We have the NIF, which is the NIF, which is the sovereign fund of India. They can own up to 49% of equity, both separately of Goa and of Bhogapuram upon conversion.
So, fine, I understand that's the kind of investment you're making there, but what's the capacity in terms of handling the passengers? And if you can give me a broad ballpark as to what could be the, let's say, revenue potential out of it?
So, as I said earlier, I mean, revenue potential, I will not be able to guide because that is determined by the regulator when they determine the tariff. Right. So, so we will be putting in about almost 5,000 odd crores again of investment over there. Mixed, of course, with equity and debt, and it will be determined based on the forecast of the passengers. So the yield per passenger gets determined over there. Interesting part about Bhogapuram is that there is what you call a holiday of revenue share for a period of 10 years. So initially there will be a much better financial reporting over there.
But what about the other privatization opportunities? And you'll appreciate me asking this question because I was just going through some of the data. While government has announced that they're looking at setting up a lot more airports, privatizing quite a few, you haven't bagged any since 2018.
We are not under pressure to bag any. If you look at our airports, today we are doing more than 100 million passengers in Delhi and Hyderabad and Goa. And the growth in this passenger is little more than 10%. So I'm adding actually 100 million passengers within my current portfolio.
Organically itself.
Whereas other airports which are going to be privatized, they are about 5 million passenger each. So under no pressure to get new airports. Our whole focus is to how to quickly turn our airports into profitable entities, and how, after meeting all stakeholder commitments, which is basically revenue share to the government, how we can start to service our shareholders who've been waiting quite patiently now for the last 10 to 15 years to start getting dividends from the airports. So our first focus is that, and interestingly, in Hyderabad, it's already profitable. This year we expect dividend flows
Profitable at the bottom line itself, not just EBITDA.
Yes, yes. Okay. And we expect dividend flows from Hyderabad to the listco start to happen in this current fiscal year itself. So, our whole focus is profitability and also start taking our airport platforms to a level where we can start giving dividend out to our shareholders in the next 3 to 4 years' time.
So next 3 to 4 years, within that we'll see the dividend coming for the shareholders, or after that?
After that.
Fair enough. At least that clarity is indeed appreciated.
But that's a prerogative of the
I understand, of course, of how the business and the board really pans out.
Yeah.
But just before I wrap up the conversation about diversification, I also wanted to bring in the picture about your international exposure, because you've already had experience right in Indonesia, Philippines, Greece, etc. And what I understand is you're looking at expanding in Middle East as well. Talk to me about what exactly shape and form would that be in?
So unlike what we had in Istanbul or Maldives, then in Philippines, and now of course in Indonesia, our whole focus right now in the international space is more on the services side. And we intend to provide IT services, project management services, engineering services to many of the airports which are in the Middle East. They don't require capital, but they do require managerial expertise, and that's what we bring to the table. We will look for other airports also. That area is mostly in Southeast Asia. So as you know, we have an airport in Indonesia. There is possibility of Jakarta coming for privatization sometime in the future, so we will surely look at that very carefully. Last year we had bid for Manila Airport. We did not win that. We were number 2 in the stack of ranking there, but basically shows that we are quite hopeful of winning some of those bids as they come in Southeast Asia. Southeast Asia is pretty much similar working landscape as India is. So we are happy to look at those airports, but that will be very opportunistic. We were very conscious that we don't want to put too much of our equity capital to use, and we'll partner. Usually stakes in these airports. Majority is by a local partner, whether it is a sovereign fund of that country or a third party, and that's how we will work that out.
Okay, so profitable growth, that's what the clear focus is. Let's take a small break, and we'll be right back and discuss rest of the business as well, and as to how they plan to grow the non-aero side of the business too. Welcome back. We are still at the Mopa Airport in Goa and in conversation with Saurabh Chawla. Saurabh, I wanted to get a sense from you regarding the Delhi tariff hike that you indicated. Give me a bit of a sneak peek as to what it could mean really for the business. What kind of upward revision are you expecting, the timeline, etc.?
Well, we've already filed for the tariff revision, and this is for the control period 5, and
which starts from when to when?
From 1st April 2024 for 5 years. So whatever tariff comes, it comes from a retrospective effect, taking into account the full time value of money. As I was indicating earlier, we have spent about 12,500 crores. So our regulated asset base has gone up almost 3 times. And on top of that, we have also won many claims and interpretations from the tribunal. So we expect that those will also be incorporated in this current tariff which comes. So minimum, I would say a 3x number of the current tariff should be there, if not more. So it actually has a meaningful change to our P&L of Delhi Airport as we go forward.
So 3x is a sizable number, so I'm sure that's the most important thing that you're waiting out for. But talk about the non-aero part of business, because that too comes with good amount of margins, etc. for you, and good scalability. Talk to me about what's the plan to increase that, and give me a bit of indication as to where the Indian spend is right now in terms of per person, and what is the global average, etc.
So we are actually trying to simplify our business model. We are creating a consumer company out of a utility company. A utility company has an assured return on equity, which we get
Which you
through our
have.
tariff.
Yeah.
But now with the non-aero part of it, and especially the retail and the duty-free, we want to actually capture the consumer demand, which today's young and upwardly mobile and increasingly, spendthrift consumer base is emerging. So how can we offer to these consumers that they spend at our airports? Just to give you some insight, today our spend per passenger in duty free is just $12, combined from Delhi and Hyderabad. Uh, in Dubai and Singapore, it's about $25.
Oh.
But Indian spending in Dubai is more than $40.
Okay.
Indian spending in Paris is more than 40 euros.
Talk to me about a few more consumer trends, in the sense, what's the breakup right now for international versus domestic passengers for you? And going forward, do you anticipate a higher growth in the non-aero revenue versus aero revenue? What will the contribution mix look like?
So it's very interesting. For example, in Delhi, which is a lot of international traffic is there, almost 70% of my revenues are coming from non-aero.
Oh,
right?
wow, that's quite a bit.
And it's opposite in Hyderabad. So the focus in Hyderabad is how do we increase international flights, how do we increase the duty-free area and give that same optionality to consumers. In Delhi, the focus now and strategy is how to convert Delhi into a true hub, a hub like it is in Dubai, right? So all domestic to international, international to international flights, how do we attract those into Delhi airport so that consumers spend more time at the airport? Purchase at the airport is very impulsive, right? So you have the goodies available, it meets the eye, the person will go and spend, right? Nobody goes to the airport that, I'm going to buy this at this particular airport. It doesn't happen that way. So you have to, build on this psychological parameters and also on the airline connectivity from international, domestic, domestic, international, domestic, which is a little lower spend, and international, which is also emerging. Very recent phenomena. Flights out of Sri Lanka coming to Delhi and then flying to Europe and the US, right? So we are offering that now. In addition, flights coming from Europe going to Australia instead of stopping over in
Singapore
Southeast Asia.
Else,
Why don't they stop over in Delhi?
Of course.
And airline connectivity, airline association. So, for example, Air India is part of Star Alliance. Singapore Air is part of Star Alliance. United Air is part of Star Alliance. So when you mesh all these associations and create your airport as a destination hub, all these things will start to emerge. The spend will go up from $12 to $15 to $18. It's a natural migration growth that will happen. But you have to create that effort over there on the ground.
Fair, but for that, I think what you also need is a lot better connectivity and a lot more aircrafts. And if I have it right, that's a bit of a pressure point right now, because demand-wise, there's enough. Supply side is a bit of a challenge.
Yeah, so airport are today full at the existing aircraft availability. Aircrafts are full. If you go to any flight, it's above 85% passenger load. But yes, supply of aircrafts are a little problematic because of disruption in the supply chain during COVID times. So it'll take some time that to emerge, but the trend line is positive. That's the main thing. And once these supply issues are behind us, I think you will see much better throughput in our airports, and that throughput purchasing more at our airports. That's the whole focus line.
Yeah, the focus is on more, and talking about more, traffic has been, of course, increasing for you quite steadily. You're already past the 100 million passenger mark. Talk to me about the growth rate going forward, because specifically talking about Q1, it was a bit soft. In July itself, in fact, we saw just 7.7% kind of growth. Do you anticipate, let's say, at least high teen figure by the end of the year?
Yeah, so I mean, on a secular basis, you will look at the growth around 12 to 15%.
That's in traffic.
That's in traffic, and that's how you should also, guide. We are not a Q-on-Q play. We will be always soft in the first quarter and will be doing very well in the last quarter. That's the seasonality in our business.
Fair.
So infra play is a long-term play, and very long-term investors, they become our shareholders. And those people who are looking at maybe 10 to 15 years as a time horizon is what they become our shareholders at. So that is what our focus is, to have the requisite elements in our business to attract such investors, and look at about 10 to 15% growth in our traffic, and because the operating leverages are already there, a much higher growth in the terms of revenue and profitability.
And what could that growth be, if I can try and get that number from you? In terms of revenue, it's still, I know it's a bit difficult to call, but at least on the profitability, because you're still in the red right now. You talked about operating leverage. Could we expect the company to turn profitable at the bottom line maybe 2 years out?
2 years will be a little too short. It will
Okay.
all depend upon what happens with the tariff order at Delhi. But I'm sure in next 3 to 5 years' time, GMR Airports at the platform level will be profitable. Hyderabad is already profitable. Hyderabad is in a position to give dividend to its shareholder, which is the list co for fiscal year 25. So I'm sure Delhi, once the new tariff order comes, will be in a position to start also giving dividends out in maybe fourth year of the new tariff period.
So yeah, given the fact that bulk of the capex is behind, is that something that we should factor in the debt as well, that the peak is over, and what will be the sustainable debt level from here on?
Yeah, so it's very important that the debt is actually looked at our asset levels.
Okay,
Because each airport is a separate company, it has its own equity shareholders. The debt is ring fenced, and it is not to recourse to the list co. So, but having said that, you're absolutely right. On a consolidated basis, our debt levels will peak out next year, because we are already putting a new greenfield airport in Bhogapuram, for which it will be a combination of both debt and equity that will be used to build out that airport. So it will next year is when I think the debt should peak out.
Yeah, because analysts are expecting that your EBITDA can grow at least 2 to 3x over the next 3 years, and they're expecting you to turn free cash positive even from the equity side of things within a couple of years. Realistic?
Very realistic.
Okay.
Very realistic. And that's what our focus is. As I said, our whole focus is not to win airports at any cost. Our focus is become profitable at any cost.
But I just wanted to come back to the point that we were discussing on aero, non-aero revenue. Talk to me about the growth rates, because of course traffic is going to drive, and the tariff revision is going to drive the aero revenue. But what's the growth rate differential going to be like for the two?
So obviously the non-aero will grow much faster. We expect high teens of growth in the non-aero side of it, whereas little low to mid-teens on the aero side of it, taking into account, of course, certain operational leverages that will play out over the next few years. So anything now above 15% growth is pretty much given in our play.
Thanks so much, Saurabh, for making time and speaking with us. Always a pleasure.
Thank you so much. Thank you for having us over.
Okay, so that was about GMR Airports and the way forward. But with that, it's a wrap on this conversation. Stay tuned to ET Now for more.